Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, guys, let's sort it all out. You can't rattle this channel. From Fortune Saturday morning. What's behind the stock market's brutal two-day crash? What a way to end the week. The market plunged again Friday, with the Dow closing down 600 points, the Nasdaq dropping 2.4%, and the S&P off 6% from its recent all-time high. Market watchers pointed to three main culprits for the swoon. What's behind door number one? A weak jobs report reignited recession fears on Wall Street. The rise of the unemployment rate to 4.3% certainly seemed to spook investors. The new data from the Labor Department triggered the so-called SOM rule, which indicates the likely start of a recession once the unemployment rate's 3-month moving average exceeds that measure's lowest point over the trailing 12 months. Quote, "We completely flipped from a position where a weaker economy was bullish to one where a weaker economy is bearish," said Jay Hatfield, the CEO of Infrastructure Capital Advisors. So, did you catch that? Bad news is bad news again. Door number two, short-term traders drove a global sell-off. According to Hatfield, short-term investors like hedge funds sold in droves over the past 2 days. He thinks they are hesitant to stay long on stocks now that the earnings season is over. That said, we think the chance of a recession remains extraordinarily low, Hatfield said, and the sell-off is irrational. And finally, door number three, investors wanted a rate cut. It's really that simple, guys. Hatfield agreed with investors who criticized the Fed Reserve for not cutting rates on Wednesday. He compared Fed Chair Jay Powell, who said a cut could be on the table for September, to Inspector Clouseau, the fictional detective consistently outwitted in the Pink Panther films. Quote, "One of their three mandates is to be behind the curve," Hatfield said of Powell's Fed. So until it's entirely obvious to everyone else in the investing world that they should cut, they're not going to cut. One factor experts say likely wasn't at play: steep losses from mega cap names. Hatfield added, "Were likely not a big driver of the market dip." I disagree a little there. Intel shares plunged 26% after the company reported a big earnings miss and announced mass layoffs, while Amazon stock fell 9% after a disappointing earnings call. But Apple, America's largest company, emerged from Friday's session slightly up. Okay, so where are you on all this, Uncle Frank? I think this is what I call a temper tantrum correction. We want a rate cut. We need a rate cut. We priced in a rate cut, and we're not getting a rate cut until the Fed is ready, so the market looked for a reason to sell. I think earnings and the jobs report both played a role. Wall Street immediately brought back recession fears in an effort to punish the Fed and nudge it towards an earlier rate cut than September. Don't forget, the election is coming up. Who wants a recession to deal with right now? Hey guys, the market could come roaring back on Monday. Who knows? Maybe just small caps. That would be fun. But don't forget my only girl at the dance theory. If you're the only girl at the dance, by default, you're the prettiest girl at the dance, right? Even if you're a little ugly. Sometimes the U.S. stock market is the only girl at the dance worth investing in. Having said that, one reason this sell-off might have legs is the garage sale at Berkshire Hathaway. Berkshire cuts Apple stake by almost half in selling spree. Berkshire Hathaway slashed its stake in Apple by almost 50% as part of a massive second quarter selling spree that sent billionaire Warren Buffett's cash pile to a record $276.9 billion. So the old man is pulling back, which means we should be on the lookout for more possible weakness in the indexes. So on Friday, the second day of the pullback, Uncle Frank went shopping. I added some small positions in a new account because I'm not completely sure this pullback is over, but I think we will recover from here. Not investment advice or advisor, just my opinion. Once I felt the bleeding was over, in a new account I opened up some positions. I bought some Archer under 4 at $3.99. It finished the day at $4.02, up a penny at 0.25%. I opened a new position in AMC under 5 at $4.96. Amy closed at $4.94, down 18 cents or 3.52%. Then I bought some HUMA, H-U-M-A, at $8.19. It finished the day at $8.25, down 37 cents or 4.29%. But in the after-hours session, went up to $8.39 or 14 cents, gaining 1.7% in the after-hours session. Opened a new position in GME at $20.80. It finished the day at $21.07, down 64 cents or 2.95%. And I bought 40 Archer $4 calls expiring October 18th. Average cost about 33 cents. Those got up to 50 on Friday or 52.67%. Now, let me give you my reasoning behind the trades. I think Archer Aviation will be a big hit, and there's nothing the shorts can do about it. I think AMC is dead money. Bam was out there on Twitter saying he sees a really strong buy signal. So if he's right and the bad actors don't destroy it, we may put in a nice move from here unless the sell-off resumes. I was hoping AMC would chase GameStop up if Ryan Cohen finally shares what he intends to do with the $4 billion. But then I read he's getting sued by Bed Bath & Beyond for insider trading, so that may be on the back burner for now. AMC will never recover to the extent we deserve without a black or white swan event. It's just my opinion, guys. This is not financial advice. I will never tell you to buy, sell, or hold any security or cryptocurrency. This is for entertainment purposes only. Now, HUMA is an interesting trade for me. It's popular with the politicians, and I wanted a little exposure to that one. GameStop, it's all about Ryan Cohen for now, as I said. Until he discloses what he plans to do with that big war chest, I think we're sideways or down from here, but we'll see. Anything can happen. For those of you that follow the channel closely, you know Uncle Frank's favorite place to hide is GUT, G-U-T, or the Gabelli Utility Trust. There's the daily chart. What happened to GUT on Friday? Nothing. Closed at $6.14, and it pays a dividend of 9.77% at that price, and it pays every month instead of quarterly. Uncle Frank likes to accumulate it under 6 to get that 10% yield. Now here's the monthly chart on GUT. I should warn you, it trades at a high premium over its net asset value. It can and does crash when the market does. I put some yellow arrows in there, but I like utilities far more than I like treasuries, real estate investment trusts, and limited partnerships when it comes to income trades. I also believe utility companies are in far better shape, relatively speaking, than our banks are right now. Just my 2 cents. Now don't worry about Uncle Frank because he has no intention of selling his GUT because it'll pay me every month for as long as I own it. Not investment advice or advisor. XRP has been very volatile over the past 7 days, losing 5.67% at the time of this recording on Saturday. But the 1 month chart on XRP has a different look to it, doesn't it? Still up over 19%, and you can see how important that 55-cent support line really is. The 1 year chart on XRP shows a clear channel with the coin down over 14%, breaking and holding under 55 cents. Could mean a visit to 50, even 45, and now I'm going to tell you why I don't give a shit. Uncle Frank will add to his XRP bag until the cows come home, and I have no problem showing you the receipts. Let me make this crystal clear for everyone that follows the channel. I think XRP is the best crypto project on the planet. I have never seen a better trade setup than this one in my lifetime. I think it will have a bigger market cap than Ethereum and bigger than Bitcoin one day. Yeah, I said it. It was once bigger than Ethereum back in the day. So don't tell me that it can't happen again. I think the XRP ETFs will be the biggest exchange-traded funds of all the crypto projects to date, whether you like them or not. I think after this case with the SEC wraps, the coin will make a new all-time high. I think the project will experience a massive adoption phase all over the world. I think the trend of tokenization has only just got underway and will absorb billions of XRP. I believe XRP will quickly capture 5, even 10% of Swift's wire business. They currently run about 1.25 quadrillion a year, kids. Yeah, so I could be wrong, but I don't care what anyone else thinks when it comes to Ripple XRP. I've seen what it can do, and I'm a believer. It's better than Bitcoin and Ethereum in every way, and everyone knows it. I predict Bitcoin, Ethereum, and Solana disciples that hate XRP will buy it once it's clear of the SEC, if for no other reason than its huge potential and its low price point. Not investment advice or advisor. From Coinpedia on Friday, 47.5 million in short positions at risk if XRP hits the 0.619 mark. Okay, you make your bet and I'll make mine. I put a red line where they're short on the right. You shorts better pray the news of a settlement doesn't drop unexpectedly, because y'all going to be street pizza real quick. I want to get the countdown to big events calendar out of the way. There is no August Fed meeting scheduled, guys. That may help explain why we had this temper tantrum sell-off right here. We are 46 days to the second day of the September Fed meeting, where we're supposed to get our first rate cut. We are only 94 days to the November elections on November 5th, which will be immediately followed by the November Fed meeting on the 6th and 7th, which I find really interesting. I will be watching that one in the wake of the election. The last Fed meeting for the year will be December 17th and 18th. By January 20th, Trump should be sworn in as president. We are only 171 days to Trump's first day in office, which should mark the firing of Gary Gensler, whom I consider to be the worst Fed chair in our nation's history. Update your resume, Gary. It's time to move on. Don't bother applying for Treasury Secretary. That's a hard no. History will credit Gensler with presiding over the most corrupt, manipulated markets of all time. I hope he faces multiple oversight hearings in the future and ultimately chokes on a wiener in federal prison. So what's coming up over the next 2 weeks? Glad you asked. Monday, August 5th, 9:45 a.m. Eastern Time, S&P Final U.S. Services PMI. Tuesday, 8:30, U.S. trade deficit. Wednesday, 3 p.m., consumer credit. Thursday, 8:30 a.m., initial jobless claims. Everyone is going to be watching that after this past week's sell-off. Archer will report earnings after the bell and host an earnings call at 5 p.m. Eastern Time. Tuesday, August 13th, big one, 8:30 a.m., PPI. Wednesday, the 14th, Consumer Price Index. Thursday, August 15th, 8:30 a.m., initial jobless claims again, and U.S. retail sales. On Swan Watch, I have only this to say from Wall Street Breakfast: higher and higher. The borrowing just keeps marching along. Reckless and unyielding, said Maya McGinnis of the Committee for a Responsible Federal Budget, as the U.S. national debt crossed $35 trillion for the first time. Recall that the deficit hit $34 trillion earlier this year and passed $33 trillion just 3 months before that. The tide of red ink is swelling at a much faster pace than expected, amid increased interest costs and mandatory spending on federal programs. The CBO last month even projected that the national debt would rise to a record 122% of GDP in 2024. This is not sustainable. It has to stop now. They're going to have to deal with this eventually. Don't expect lower rates to save debt-burdened office buildings. More than $94 billion of U.S. commercial real estate is currently distressed, according to MSCI Real Assets, with a further $201 billion at risk of slipping into that category. Hey, look, guys. Looks like little Andy Left deleted all his tweets. Short seller Left's deleted tweets reappear in fraud case. Embattled short seller Andrew Left deleted his research firm's entire tweet history last year to fend off what he described at the time as class action attorneys and trolls looking for dirt in his past stock commentary. Dozens of deleted tweets are now front and center in the U.S. Justice Department's indictment, accusing Left of manipulating the markets to benefit his own trading and lying to investigators. Prosecutors say the tweets on the platform, now called X, were intended to dupe hundreds of thousands of people who followed Left's Citron research account into helping him move the market and reap millions. The short seller pleaded not guilty earlier this week in Los Angeles, where he faces decades behind bars if convicted. A status conference in the case is scheduled for Monday. The case, if it goes to trial, could shine a light on the way short sellers use social media and help draw a line between legitimate commentary and intentional manipulation. Hey, Andy, you should know when entering prison, some people may be directed to strip naked, open their mouth and lift their tongue, run their fingers over their gums, lift up their testicles, squat and cough, and you may be directed to bend over, spread your cheeks, and expose your anus as part of a cavity search. Get ready! I can't believe I missed this one from Disclosure Insight in June. DI report, SEC investigated AMC's transactions with Mudrick and Hycroft. We recently received metadata and 20 pages of records that show AMC Entertainment was involved in an undisclosed 2022-2023 SEC investigation into transactions between itself, Mudrick Capital, and Hycroft Mining that were atypical relative to the company's business and history. DataLens Q2 of 2024 results are out. Entities that lend out securities to be shorted are tracked here. Leading the list, Lucid, Trump Media and Technology Group, Immunity Bio, Beyond Meat, Canopy Growth, SiriusXM, B. Riley Financial, Visa, and SoundHound AI. Don't forget, securities lenders made more money loaning out AMC than any other security in the world in 2023. This was never mentioned by our CEO, Adam Aron, or our CFO, Sean Goodman. It also escaped the scrutiny of the SEC, FINRA, and the DOJ. How a road apple of a company in Kansas could be the top earner in the world for securities lenders and go uninvestigated is a profound mystery to me. Friday was epic. The S&P 500 lost 1.84%. The Dow lost 1.51%. NASDAQ shed 2.43%. The Russell 2000 lost 3.52%. Crude oil now under 75 at 74.14, losing 4.84%. But that's not why I brought you here. I brought you here to check the most shorted stocks using the Yahoo screener. Region is set for the U.S. Intraday price greater than $1. Average volume over the past 3 months greater than 200,000, and the exchange is set for the New York. Kohl's is in the first position. Cinemark is in 12th. AMC has moved up to the 29th spot, and Archer is now the 32nd most shorted stock on the New York Stock Exchange. When you're one of the most shorted stocks on the New York Stock Exchange, you should just expect the hit pieces. Here's one from Simply Wall Street. Archer Aviation shares could be 31% above their intrinsic value estimate. Now notice there's no author listed here. Now all of a sudden it's an editorial team. I think these people are going to be a lot more careful in the financial media, especially with Andrew left on his way to prison. But I'll read you the key insights just to be fair. The projected fair value for Archer is 307 based on two-stage free cash flow to equity. Archer Aviation's $4 share price signals that it might be 31% overvalued. The analyst price target of $879 for Archer is 186% more than our estimate of fair value. Now, I want you to know Archer hasn't sold one ticket for an eVTOL ride yet. And for every hit piece they write, I'm going to do a slide on everything they left out. Archer reveals details of plan to operate eVTOLs for United Airlines. Archer Aviation receives FAA certification to begin commercial air taxi operations. Southwest Airlines and Archer strike a deal for an electric air taxi network. Stellantis invests an additional $55 million in Archer following recent flight test milestone. Oh, you thought I was done? Archer signs deal with Signature, securing eVTOL flight access in key U.S. cities. Electric air taxis to offer 10-minute commutes across the Bay Area. Electric air taxis could fly from Houston destinations to airports in one day for about the cost of an Uber. Archer's all-electric air taxi service to launch across the UAE in 2026. Gasparino put out this piece in mid-July. It's just flat out sad to watch Biden suffer and have him continue this charade. But Charlie, that's exactly how we feel about you. A tiny man with a big mouth, big wife, and no Pulitzer, the water boy of Wall Street, who made it from the Bronx all the way to the Bronx just by kissing Wall Street's ass. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.